In today's video, we'll be covering how to retire off Tesla stock in 2030. The stock price of Tesla, the poster child of the electric vehicle sector, has soared 45% in the last 2 weeks to about $1,099, indicating a return of warmth in the market, and investors are beyond thrilled. Early retirement is typically taken after working until you reach the age of 55. To many people, having the opportunity to retire much younger than that is really a fantasy. However, Jason DeBolt, an Amazon employee who made a fortune investing in Tesla shares when he was 32, is now retired as a multimillionaire at the age of 39, and he's living proof of this fortunate reality. How did we achieve this in just 7 years? What other strategy can you use to achieve this by 2030? Keep watching to find out. To begin, it's worth noting that Tesla's market value could rise or fall by 2030. FIRE, Financial Independence, Retire Early, is a movement of people who are dedicated to a program of excessive saving and investing to retire far sooner than traditional budgets and retirement plans allow. Vicki Robin and Joe Dominguez's best-selling book, Your Money or Your Life, spawned FIRE, which suggested that people should evaluate every expense in terms of the number of working hours required to pay for it. The world is changing, and fewer individuals want to keep working at a job for years. So what's the answer? Let's look at Jason DeBolt's strategy. Many consumers, investment professionals, and financial counselors may have strong feelings regarding Jason's strategy of investing in a single firm and putting all of his eggs in one basket. But, at least so far, it appears to have worked out for him. His investment philosophy is straightforward: purchase and hold. He has about 14,850 Tesla shares, but he started with just 2,500 at the cost of just $7.50 per share for a total investment of $19,000. As we stated earlier, Tesla shares are now worth $1,099, bringing the total to $16,320,150. Tesla's market valuation has increased by more than 1,300% since then, reaching $1.1 trillion, and many believe it will go even higher. Tesla investor Gary Black posted some intriguing math on Twitter recently. He presented his case for Tesla's market capitalization to reach $4 trillion. Its current value is $1.13 trillion. According to Black, global electric car penetration will reach 60% by 2030. Tesla will have a 20% EV market share. Black says Tesla will be delivering around 10 million vehicles per year by the end of the decade, with global light vehicle sales at 85 million units. Black, who heads the Future Fund Active ETF, estimates that those deliveries, coupled with service sales tied to Tesla's existing fleet, will bring in $140 billion, or nearly $100 per share for the firm. By the end of the decade, he expects nearly 1.4 billion Tesla shares will be outstanding, up from over 1 billion currently. It's an optimistic perspective, but it's also cautious. A $3,000 stock in 2030 will return around 17% a year on average for the next 8 years, whereas Tesla stock has returned around 42% a year on average over the last 8 years. He assigns a 30 price-to-earnings ratio on $100 per share earnings, resulting in a $3,000 price target. Tesla's market capitalization would be worth $4 trillion if 1.4 billion shares were outstanding. Tesla investors would profit around 10% a year on average between 2023 and 2030 if the company reached Black's price target in 6 to 12 months, and he was correct about everything else. Purchasing and holding is one way to go, but there's another method, especially if you're just getting into the stock right now, as opposed to being an early investor. Retirement doesn't happen at a given age. Instead, it occurs when we can cover our annual expenses with passive income. How early you can become work-free is based on your savings rate and the percentage of your income you don't spend. Simply expressed, the amount of money you'll need to retire and live off of your investment returns is very key. Experts generally say that before retiring, you must have 25 times your annual costs according to the 4% guideline. In a recent Trinity University research, professors studied sustainable withdrawal rates based on various stock and bond allocations for different retirement horizons using historical market data. The researchers discovered that someone with at least 50% of their portfolio in stocks might safely withdraw 3% of their investments for 40 years without emptying their money. You can predict how long it will take to save 25 times annual costs with online retirement calculators. It would take around 37 years if you saved 20% and assumed a 5% or 7% after inflation rate of your return on your portfolio. If you saved 25%, the time would be 31 years. To retire by 2030, which is just 8 years away, you would need to ramp that percentage of savings and pour the majority of this into Tesla stocks. Don't forget to factor in inflation and how much it will affect your money. For example, inflation rates in 2021 alone exceeded 6%, the largest in decades. While this is significantly higher than the national average, you should factor in annual inflation of about 2%. This is where the concept of investing and compound interest comes in as an added average. Meanwhile, you also have to take into consideration the risk involved with investing in Tesla. As it's a growth stock, the ride may be tumultuous. It appears straightforward, yet there are numerous ifs. It's tough to predict EV penetration 8 or 9 years from now, but the auto industry tends to expect that by then 40% or 50% of all new vehicles sold will be electric, which means the stock has a good forecast. Black told Barron's that one thing is certain, gasoline costs of $7 per gallon will dramatically accelerate EV adoption. He was referring to a recent image of gasoline prices in California. Regular octane gasoline costs $6.65 per gallon, and gasoline with a higher octane rating costs around $7.26 per gallon. Experts predict this may go even higher. The profitability and market share of Tesla are also debatable. The 30 PE multiple can do the same. Traditional automakers have low price-to-earnings multiples and grow at a slower rate than the entire economy. Tesla, according to Black, will continue to grow at above-market rates in 2030. The short-term price goal for Tesla shares is $1,600 according to Black. If Black was publishing brokerage research, that would be the highest on Wall Street, with a $1,580 price target on Tesla stock. New Street research analyst Pierre Farajau currently holds the title. One of the most fundamental concepts for investors is market value, which provides a clear technique for assessing what an item is worth without ambiguity or confusion. Companies strive to raise their market values in order to become more famous in their respective industries. What about Tesla's competitors? In the tech industry, competition for high market value is severe. Many well-known corporations in the United States have market valuations of above $1 trillion. With the inauguration of the Gigafactory in Germany, Tesla will be able to greatly increase production in Europe while also cutting the cost of importing automobiles from its Shanghai factory. Despite a closure in its Shanghai facility, supply chain challenges, and increased material costs, Tesla's first quarter deliveries were up marginally at 310,000 and production was 305,000. In general, the future seems bright for electric vehicles. According to an examination of trends and advancements by the International Energy Agency, more than 10 million electric cars were on the road around the world in 2020. Despite the world being in a struggle against COVID-19 for the majority of the year and extensive lockdowns, this figure increased by 43% over the previous year. According to the IEA analysis, China has the world's largest electric vehicle fleet, with 4.5 million vehicles. However, Europe has the fastest growing fleet, with 3.2 million vehicles. It also reported a $3.2 billion increase in adjusted profits before interest, taxes, depreciation, and amortization for the period, up 77% year after year. That being said, you should probably be sure you aren't placing all your eggs in one basket, as other electric vehicle companies and renewable energy firms have a good forecast as well. You may benefit from including them in your portfolio. To lessen the impact of any particular sector on your savings, you should also invest your money in other sectors in which you don't own equities. What year do you plan to retire, and what plans do you have? Comment down below.